China just went dark. For 8 straight days, the Shanghai Exchange, the biggest physical gold and silver market on the planet, is completely shut down. 8 days. No buying, no selling, no price discovery. And if you think this is just a harmless holiday break, you are dangerously wrong. This is the calm before the storm. When the largest physical buyer in the world stops showing up, the sharks come out to feed. The paper manipulators in the West are already licking their chops. They know exactly what happens when the Eastern markets go silent. They get to set the price. They get to push it wherever they want. And right now, they want it down. Before we go any further, if you want to understand what is really happening behind the curtain while everyone else is watching the puppet show, smash that like button right now. It tells YouTube that real analysis matters, not just clickbait headlines. And if you want to catch these moves before the crowd even knows they are happening, hit subscribe. This is OG John X.X, and this channel does not sugarcoat reality. We show you the data, the patterns, and the truth, even when it hurts. Now, let me be clear about something right from the start. I do not want blind followers. I want people who think for themselves. Go verify what I am about to tell you. Look at the Shanghai Gold Exchange data yourself. Check the inventory reports. Read the Chinese export restriction announcements. The information is public. It is sitting right there. But most people will not take 5 minutes to look because it is easier to believe what the television tells them. The establishment wants you comfortable. They want you lazy. They profit when you stay ignorant. So do not trust me. Trust the numbers. Trust the pattern. And when you see it with your own eyes, you will understand why the next 8 days could change everything. Let me paint the picture for you right now. Gold is holding above $5,000. Silver is sitting near $77. Those are not normal numbers. Those are alarm bells. But here is what nobody is talking about: the premium. Go look at what physical silver is trading for in Shanghai versus New York. There is a $9 gap. $9 for the exact same piece of metal, just in a different location. Why does that gap exist? Because the East knows something the West refuses to admit. Physical metal is running out. You cannot print silver bars. You cannot create gold coins with a keyboard. The paper markets can lie. The physical markets cannot. And right now, physical is screaming. For 8 days, the biggest buyer on Earth is offline. China is celebrating Lunar New Year. Their markets are closed. Their traders are with their families. Their vaults are locked. And while they are gone, the Western banks are going to do what they always do. They are going to smash the price. We have seen this movie 100 times. Every single time the Shanghai Exchange closes for a holiday, the price of gold and silver gets hammered. It is not a coincidence. It is a strategy. They wait for the moment when physical demand disappears, and then they flood the paper market with sell orders. They create the illusion of a crash. They shake out the weak hands. They scare retail investors into selling. And then, the second Shanghai opens back up, the price reverses. Every single time. But here is what makes this time different. The supply situation has never been this tight. Shanghai silver inventories have dropped 90% over the last 6 years. 90%. Half of that drop happened just in the last 12 months. The vaults are almost empty. There is no buffer left. So when China comes back online in 8 days and they start buying again, where is the metal going to come from? It has to come from somewhere. And if it is not sitting in a warehouse, the price is going to have to go up until someone is willing to sell. That is not speculation. That is math. Supply and demand. When demand is constant and supply disappears, price explodes. It is the most basic law of economics, and it is about to play out in real time. Now, I know what some of you are thinking. You are thinking this sounds too simple. You are thinking if it was this obvious, everyone would see it. That is exactly the trap. The system has conditioned you to distrust your own logic. They have made it so complicated, so full of jargon and noise, that you second-guess the obvious. But let me ask you this. If you owned a pile of something that was running out, and you knew the biggest buyer in the world was about to come back and need it desperately, would you sell it cheap? Of course not. You would hold. You would wait. You would let the price come to you. That is what the smart money is doing right now. Go look at the Commitment of Traders report. The hedge funds, the managed money, the so-called smart institutions, they have almost no long positions in silver. They are net short. They are betting against it. Sound familiar? This is the exact same setup we saw in February of 2024. The big money was positioned wrong. Everyone was bearish. And then silver had its largest rally of the entire year. When everyone is on one side of the boat tips. Right now, the crowd is leaning so far to the bearish side that the boat is about to capsize. And the contrarians, the people willing to stand on the other side, are going to be the ones who stay dry. Meanwhile, the central banks are not confused. They know exactly what is happening. They are buying gold at record levels, not selling, buying. These are the most sophisticated financial players on the planet. They have access to data we will never see. They have economists and analysts running models 24/7, and their conclusion is simple. Get out of paper, get into metal. They are loading their balance sheets with physical gold, while retail investors are selling their ETFs to chase tech stocks and meme coins. This is the biggest divergence we have seen in decades. The smart money is running for the exits. The dumb money is running into the fire. You want to know why gold is not a bubble at $5,000? Because it is not gold that is changing. It is the dollar that is dying. Think of it like this. If you have a fever of 104 degrees, the thermometer is not broken. Your body is sick. The thermometer is just telling you the truth. Gold is the thermometer. It is telling us that the currency system is infected. Every government on earth has the same disease. They spend more than they earn. They print money to cover the gap. They call it stimulus. They call it quantitative easing. They use fancy words to hide the simple truth. They are debasing the currency. They are stealing your purchasing power in slow motion, and gold is the only thing that cannot lie about it. Since 1971, we have been living in a debt-based system. The whole world runs on IOUs. We expected everyone to keep accepting our paper forever. We thought we could print our way out of every problem. But the trust is breaking. The world is waking up, and when trust dies, currency dies with it. History has shown us this story 1,000 times. Go read about the Weimar Republic. Go study what happened in Zimbabwe. Go look at Venezuela. Every single time a government prints too much money, the same thing happens. The currency collapses. The people holding paper lose everything, and the people holding hard assets survive. We are not special. We are not different. The laws of economics do not care about your flag or your military. When you break the rules, you pay the price. Ray Dalio, one of the smartest investors alive, said it perfectly. When debt gets too high, there are only two ways out. You either default or you print. No government has ever chosen default when they have a printing press. They always choose to print. They always choose to destroy the currency. And that is exactly what is happening right now. Look at what they are doing, not what they are saying. The Federal Reserve is trapped. They have two buttons in front of them. Button A saves the bond market. It keeps the government funded. It keeps the system alive. But it requires printing trillions of dollars, which kills the currency. Button B saves the dollar. It stops the printing. It restores trust in the currency. But it crashes the bond market, which collapses the government. They cannot push both buttons. They have already made their choice. They are going to sacrifice the dollar to save the system. They will let your savings evaporate to keep the machine running. And they will blame it on supply chains, on wars, on pandemics, on anything except the truth. The truth is simple. They printed too much money, they borrowed too much, and now the bill is due. But here is where it gets personal. You are not a central bank. You are not a hedge fund. You do not have the luxury of waiting until the crash happens to protect yourself. The people who win in this kind of environment are the ones who see it coming and position themselves early. The people who lose are the ones who wait for confirmation. By the time everyone agrees that the dollar is collapsing, it is already too late. The price of gold will be 10,000. The price of silver will be 200, and you will be priced out. That is why these 8 days matter so much. While China is dark, the Western banks are going to try to crush the price one more time. They are going to create fear. They are going to shake the tree and see who falls out. If you panic and sell, you lose. If you understand what is happening and you hold, or better yet, if you buy, you win. This is not a trade. This is not a gamble. This is financial warfare. And in war, the side that panics first loses. Now, I am not going to sit here and pretend this is risk-free. Nothing is risk-free. Gold just went parabolic. It shot straight up. Markets that go vertical often come back down just as fast. Silver is sitting near resistance. It could get rejected and fall hard. If you are over-leveraged, if you are using margin, if you borrowed money to buy metal, you are playing with fire. A pullback could wipe you out. This is why I keep saying this is about wealth preservation, not get-rich-quick schemes. The people who survive are the ones who can handle the volatility without selling. The people who get destroyed are the ones who bought at the top with money they cannot afford to lose. But let me show you why the math does not care about short-term moves. The gold to silver ratio is sitting at 65 to 1. That means it takes 65 ounces of silver to buy 1 ounce of gold. Historically, that ratio has been 15 to 1. Even looking at what comes out of the ground, for every ounce of gold miners find, they find 8 ounces of silver. But the market is pricing silver like it is trash. It is undervalued by a factor of 4 at minimum, maybe as much as 8 depending on how you calculate it. This gap will close. It has to. Either gold crashes, which seems unlikely given the money printing, or silver explodes. There is no third option. The equation has to balance, and when it does, the move will not be slow. It will be violent. We are already in a supply deficit. We have been using more silver than we mine for 5 straight years. The deficit is not getting smaller. It is getting bigger. And now the United States government has declared silver a critical mineral for national security. They need it for AI chips. They need it for missile systems. They need it for advanced electronics. Do you think the military cares about the spot price? Do you think they are going to let a supply shortage stop them from building weapons? No. They will pay whatever it takes. They will seize supply if they have to. Market economics go out the window when national survival is on the line. China knows this too. They are the largest consumer of silver on Earth. They need it for solar panels. They need it for electronics. They need it for their military. And they are tightening export controls. If tensions escalate, if the trade war gets worse, China could cut off silver exports entirely. And if that happens, the West will be scrambling. The price will not drift higher. It will gap up overnight. You will wake up one morning and silver will be trading at $150, and there will be no metal available at any price. That is not fear-mongering. That is the logical outcome of a supply crisis combined with a geopolitical standoff. The pieces are already on the board. The moves are already being made. The only question is whether you see it coming. So here is what you need to do right now. Go verify everything I just said. Look at the Shanghai inventory data. Check the Commitment of Traders report. Read about the U.S. critical minerals list. Look at the central bank gold purchases. Do not take my word for it. Do the research yourself. And when you see the pattern, when you see how all the pieces fit together, you will understand why the next 8 days are not just another holiday. They are a setup. The stage is being set for one of the biggest moves we have seen in years. And you have a choice. You can panic when the price drops. You can listen to the talking heads on television who tell you it is over. Or you can understand that this is the last shakeout before the real move begins. The smart money is already positioned. The central banks are already loaded. The only question is, will you be ready when Shanghai opens back up and the buying starts again? There is one more thing you need to see. A regulatory change is coming that almost nobody is talking about. It is going to force banks to hold more physical assets on their balance sheets. And when that deadline hits, the scramble for metal is going to be unlike anything we have ever seen. I break down the exact timeline and how to position yourself in this video right here. Do not wait. Click it now.